Good afternoon, folks. It's Joe Baker with Trade Pilot Pro. Hope you all had a wonderful end of summer weekend. Now we can get back to business here and see if we can't get this market to move in a decent direction, up or down. If you look at a daily chart over the last, well, since say late July, we have, I know this is a weekly chart you're looking at here, but looking at the daily, the market kind of lacked some symmetry. It looked like it wanted to break down, it broke up. Looked like it wanted to break up, it broke down. Looked like it wanted to break down, it broke up. And we've just kind of been in this range. And so I decided to put on a weekly. And this is what I'm seeing. And we can try to do the best we can with this pattern. But it could be a head and shoulders, even albeit kind of a yucky looking head and shoulders, but a head and shoulders nonetheless. Taking a Fibonacci structure from this point here, this point A to point B to point C. We don't even want to see that one because it's a 200 and some odd point drop from where we currently are. So we don't want to see that. However, this is a weekly pitchfork, okay, and this shows market symmetry. And this is what has been holding. I guess I should have done this a while ago because I did just have it put it on a weekly chart with the forks. Because we do so much intraday trading, but it's always good to see a big picture of what the market's trying to show us. So we're seeing that the market is holding this pattern, and obviously if we take out this 1231 area, that would probably trigger a market structure sell. Granted, we were up at the 1280, so that's quite a bit away from here. But I'm just showing you the overall direction of this market. Now, obviously, as I told you, all the market has to do is just pop up, and this changes directions, and not a big deal. But I just thought you might want to just look at the market on a weekly basis and do your own analogies. Something that I've neglected to do. I've been doing 240-minute and daily, but I just could not find any symmetry to the market. So we'll see what plays out from here. As we know, the markets do tend to heat up after the summer's over. Obviously, the traders get back. We had an incredibly light week this prior week. I think we did fractions of the volume, and I believe everybody was on vacation. So it provided a nice opportunity for a lot of the traders, such as what we do as far as the S&P futures, due to the fact that we stayed within the ranges and we just kept hitting the same levels over and over again. I don't know if that will continue, but we'll see. But I will be in touch and go over this a little bit more in depth after Tuesday's market action. Let's get over to the intraday levels for tomorrow. Okay, here we go. I'm going to explain this a little bit more as we go forward as well. I put less pivot lines in because what's happened is the market has kind of created layers, okay, of pivots, and I'm trying to make it a little bit easier. It's going to be a little bit tougher around these areas, but you'll understand why in a moment. My line in the sand is 1285.50. I'm looking for higher levels above that. We do have a breakout at 87, so just be careful around this 1285.50 to 87 area, okay, because this is going to be an area of resistance. And then up above we got 1292, and then a target of 1297.25 to the upside, with a possible extension to 1298, and then all the way up to 1303.50. To the downside, underneath 1285.50, we've got 1281.50, 1278, a breakdown of 1276.50 area, 1273, and then a target of 1266.50. So let me just explain a little bit. The 92 area has formed layers because it's been such an area of resistance and support that buyers and sellers were jumping the gun earlier and later. So the 1292 area also goes to 1293, 1294. It's just layered. Same with the 75 area is layered. Okay, so you got 75 area, 73.50, 76. We've been hitting off this all summer long. So as you know, those areas of support and resistance just get thicker. Okay, so just be careful in these areas. So what I would do, what I did is I put the big areas, okay, which I thought needed to be taken out, and obviously be very careful around all these areas, because we've been in such a range that I think if we start to take out any of the areas to the upside or the downside, we could get some pretty heavy acceleration. So, you know, now that the summer is over and most people get back to work in the fall, I would, you know, as far as the traders and so forth, I would just, you know, just urge extra caution going forward. And I just want to touch on, you know, the market itself as far as like the oil. You know, as we see oil's down big, you know, 4% plus on this hurricane news that, you know, they didn't take out these offshore rigs and so forth. But you have to understand what an overcrowded trade does, and that was just an overcrowded trade. So understand this can happen in any market. That when something looks like it's a sure thing, you always have to scratch your head and say, you know, what am I not seeing? And, you know, I don't trade oil. I do watch the oil markets. I do not personally trade it. However, I just wanted to just make note that whenever you see a trade that just looks like a guarantee, obviously buying oil before a major hurricane sounds like you'd be a genius. And as you see, it's always something that you have to watch for in any market, especially ones that are zero sum. Just want to make note of that, and that was the typical overcrowded trade where everybody just got long oil, and you see what happened. You know, the market tends to go the opposite way. So just a little psychological note there. All right, guys, as you know, you can sign up over at my blog, which is on the right-hand side. Drop down, hit the link on the YouTube front page, and you will get these levels emailed to you, absolutely free. And you know, you're all welcome to come in and join our trading room. It's our intraday chat where we actually call the trades in real time. All right, folks, take care, and I will see you tomorrow.